Hello, this is Balas and this is CPA Talk. Today I'm going to talk about 2018 tax returns. 2018 is around almost done, and the first thing we have to do from January to April is file a tax return. If you remember 2017, end of the 2017, there was a tax law changes. This was the most significant tax law change from 1986. And today I would like to talk about 12 most important aspect of individual tax return changes. And our next segment I'll talk about the changes in the business tax returns, which is also very significant. The number one changes for 2018 is the tax rate. Across the board from 39% to 10%, it was reduced by 2%. So if you are in a 25% bracket, you will be paying 2% less. Regardless of any bracket you are, your rate will be 2% down, which will reduce your taxes. And then number two is the increase in standard deductions. This year, which means 2018, you will see a huge increase in your standard deductions. It's from $6,500 for individuals to it's going to go up to $12,000. For married filing joint, this your standard deduction will go up to $24,000, which reduces your tax a lot. Some of them even don't have to pay taxes because of this increase. And this also benefits people who could not able to itemize their tax return due to already paying paid the property tax and mortgage. And this is a very good plus for the average middle class income. And the number three is they took away the exemptions. Ever since we filing the tax returns, we know after filling your name and address, you wrote down the exemptions, children's exemptions, how many dependents you have. Now they took away the exemptions amount, which will hurt people who have a large families, a large number of children, and some even have parents on their tax return. Now there's no benefit of doing that. There might be other benefits for having a children, but not for the exemptions. But on the contrary, this will help people who do not have children or very few children, so children are gone out of the house. So there's a give and take. The income burden has shifted from those who have lesser children and equalized with the people with the more children. And the number four is the one issue I get a call all the time for the last 3-4 years, which is Obamacare Tax Penalty. Most of my clients are business owners. Sometimes they do not buy health insurance due to various reasons, and cost also one of the reasons. And the penalty had gone up from minimal $94 to up and up. Now it's $800-900 in 2016-17. So this is a very welcome news for those who do not want to buy Obamacare insurance. But the only catch is it's going to start from 2019. So if you did not buy in 2018, you still have to pay taxes for that. Number five is 2% deductions, which is net tax benefits people used to have for those who first file itemized tax return, which is Schedule A. And within the Schedule A, there in the bottom section, there's a 2% expenses you have, such as dues, and your uniform, your tools, your tax prep fee, your locker box fees, and the significant item is the mileage for the employees who have to drive a lot, but still the employer doesn't give you money back. They used to be able to use that unreimbursed business expense, employee business expense to reduce taxes. Now that's going to be taken away, so you cannot do it. The other one is in fact, it's not a tax cut. It's a continuation of the tax cut, which was expiring in 2017. They extended up to 2026, which is a medical expense, which is 7.5% more than your income. So if you are planning to take a huge, large medical expense deductions, you can still take it, so you can collect those bills and records for that. Other one is the SALT. SALT changes. What used to be is if you pay state and local taxes, you used to be able to deduct those on your Schedule A itemized deduction 100%. Now they put the cap on that one to $10,000. So if your state and local tax is over $10,000, then you cannot take more than $10,000, which is a loss for people, especially who live in high tax states like New York and Pennsylvania. And people in Texas might not even notice this thing, but there are large portion of the country which will feel the effect of this tax cap. Other one is mortgage interest deduction has been capped to only up to the loan $750,000. What used to be before this, I remember like 10-15 years ago, there was a cap for $1 million a loan that they took away, unlimited loan. You can take the deduction, mortgage deductions. Now they bring back the cap to $750,000 loan only. So if you have a house, a mortgage loan which is higher than $750,000, then you need to prorate and reduce your mortgage interest deductions. And together they took away this personal property line of credit. That was used by banks to give you additional loan for second mortgage of your house, and now they took away, so there's no benefit of getting the mortgage line of credit. Other one is it's alimony payment. This will affect people who have divorced and have to pay alimony to their spouse. What it used to be is you were able to deduct those alimony payment from your income, and those who were receiving the alimony had to report that as income. Now they took away that deduction, so if you have to pay alimony, and you still have to pay for the whole income you earned. Another item they changed this year is a moving expense. And what used to be, if you move for 50 miles or more because of your change of job, and then you were able to deduct all the transportation expense, job search, and everything else. Now the government took it away, everything except for those armed forces. So if you have a moving expense, you are not able to take it this year from 2018, and this will affect a lot, huge, for especially people who move from overseas. Their ticket price is very high. Another one is a child tax credit. They raised the child tax credit from $1,000 to $2,000, and not only that, the threshold you're eligible to receive a child tax credit has gone up significantly. So those are upper high middle income people who over 200,000 income joint. You can still, now you're able to take child tax credit deductions. So in the end, this year, some people get more benefit and some people got less benefit. Overall, everybody got the benefit. And before I go, I just wanted to couple of things which have been floating around the internet. Just want to let you know, especially people who have to file has a cap of SALT, state and local tax, that some of the local mayors and the government are talking that payment to the state tax as classifying as a charity to the government, a donation to the government, and take a charity deductions. Please do not do that, because IRS is looking very closely, and do not reclassify your charity or tax payment as a charity. Having said that, let's start the tax return, and let's file early, and if you get a refund back, you will be getting the refund early. Thank you. Bye bye.